Buffett has spoken, ladies and gentlemen. Not Jimmy Buffett, the Oracle of Omaha, Warren Buffett. In this video, I want to cover some of the key highlights of the Berkshire Hathaway annual shareholder meeting and what kind of insights can we take away from it as an investor. Hello everyone, my name is Mike the CPA and I produce videos on this channel around finances, investing, and taxes. Thank you so much for being here. And I want to welcome all the new subscribers as we discuss the legend of investing, Warren Buffett. And the man is still at it, ladies and gentlemen. Almost 90 years old. He will be in August of this year.
1954 was my best year, but I was working absolutely with peanuts, unfortunately. And
can you believe it? Talk about a guy who loves his job, loves what he does. Whether you're a fan of Warren Buffett or not, I think is irrelevant in this conversation because I think there's always something you can gain from listening to him speak. Berkshire Hathaway is a company Warren Buffett now has owned for quite some time and has become a conglomerate. Today, the conglomerate owns more than 90 companies, including GEICO, Dairy Queen, Fruit of the Loom, and Duracell, and has major investments in companies including Apple, American Express, Coca-Cola, and Bank of America. I don't know if you guys were able to catch that shareholder meeting last week, but man, the guy has passion and a love for what he does. As he spoke for 5 hours, guys. 5 hours at 89 years old.
Damn!
Now, in my opinion, this is just my opinion, over the years, as I followed Warren Buffett, as I've read many of his books, as he's read some of his shareholder letters, which is some of the best material you can read to learn investing, is look at Berkshire Hathaway, go back to the letters he's written to shareholders, and read the man's wisdom. Listen, guys, there's a couple key takeaways from this meeting that I want to share with you. And being in the spotlight like the man is, you know, a lot of people look at him, and he's kind of been pegged this way a little bit, I think, over the years as a cheerleader for the American economy, a cheerleader for investing, and in a sense, he kind of is. He kind of is, in my opinion. But, you know, he's one who is very optimistic. And I think when this last shareholder meeting was taking place, I think the press, the overall sentiment, that I was getting from it is that a lot of people were expecting him to be more positive about the current situation we're in and looking for some sort of insight, some sort of clue that he thought that the economy was going to be recovering from the situation we're in with this whole thing, which I cannot say, otherwise I'll be instantly demonetized. But that's not what we gathered, though, if you watch. That's not what the man said. He's never seen anything like this. And so to be able to confidently say that within the next year or so we're going to come out of it, he said, I don't know. And the fact of the matter is we can really see, judge someone not by what they say, but by their actions, right? Their actions speak louder than words. And currently, we can see right on the Berkshire Hathaway financials, he's sitting on over $130 billion with a B dollars in cash, waiting on the sideline. If you guys were able to tune into that meeting, he had questions being asked of why are you not buying right now? We saw the market take a quick dip, right, from in between February and March, but still the man just compiling cash. So why isn't he buying? He thinks the Fed's doing a good job.
And every one of those people that issued bonds in late March and April, I sent a thank you letter to the Fed because it would not have happened if they hadn't operated with really unprecedented speed and determination.
He's concerned a little bit about what the repercussions are of all this money printing. But with that being said, he doesn't really see any companies that are very attractive right now for him to acquire or to take a significant stakehold in at these price levels. You can tell he still thinks, in my opinion, after watching that, I can tell the man still thinks things are way overvalued. But like Buffett said several times throughout the meeting, he says, I don't really know where the market's going. And he says, I honestly don't think anybody can predict it. He said, I don't even know what the market's going to do tomorrow. So he said for me to be able to determine what's going to happen a year from now, he says, I have no idea. In the short term, Buffett's basically saying, look guys, I don't know where this thing's going, especially not in the short term, but in the long run, I think we're going to do okay over the next 20, 30 years. He doesn't know yet what the economy's going to do, and the stock market isn't the economy. It's important to remember that. One of the things I think you will like about Buffett, if you look at his interviews on YouTube, is the guy's very forthcoming about his mistakes. He's not afraid to share what mistakes he's making. And that's good because you can always learn more, I think, from people's mistakes rather than their successes. One of the most recent mistakes, if you listen to Buffett, is his position in the airline industry. Of course, Buffett was one of the largest stakeholders in Delta Airlines, but now he's since exited that position.
Prospects are that it will continually lose money in the future, but we will certainly we'll try to sell it to somebody else, but one way or another we will not continue to hold it.
He doesn't see airlines coming back anytime soon. Buffett's commonly touted as the king of long-term investing, or the long-term buy and hold investor. But if you step back and you look at the history of what he's done over the years as an investor, you'll see that he doesn't always hold things long-term. Now listen to what Buffett says here. He says, if you get in a lousy business, get out of it. I've always said if you want to be known as a good manager, buy a good business, he added. That's the way to do it, and everyone will think you are smart. From that, we can see that Buffett's not afraid to pull the trigger to exit a position if it's running a loss, if he doesn't feel that he can predict when cash flows or income projections might improve for that particular business. Buffett is not a man who thinks people should go out and buy individual stocks.
I agree with everything that, I forget his name, but said. I mean, the truth is that I recommend the S&P 500.
He doesn't think most people should be involved in that. Funny thing is, though, that's pretty much all the man owns is individual company stocks. But of course, he has billions and billions of dollars to play with. But this is something you've probably already heard before if you've watched previous Buffett interviews. But Buffett is very big on exchange-traded funds, or ETFs, where you buy basically an ETF is a group or a bundle of stocks you can buy with a very low fee ratio. And it's all the diversification, or a lot of the diversification, is built into that exchange-traded fund, which may own dozens or even hundreds of individual company stocks. So you don't have to be out there trying to be a stock picker, trying to determine which stock is best for you. He often commented on the power of dividends. And I don't know if you know this, but based on all the company holdings that Buffett owns, he makes hundreds of millions of dollars every single year, compounding annually within Berkshire Hathaway just from dividends.
Buffett's company, Berkshire Hathaway, made $640 million in dividends just from their investment in the Coke company in 2019.
The funny thing, though, is for Berkshire Hathaway Class A shares, which sell for about $260,000, $270,000 per share, which I would literally have to sell this house that I'm in to buy one share. No, thank you. That company, if you look at it, it doesn't pay a dividend. But he loves buying companies that do pay dividends. Now, even though Buffett's a big believer in the S&P 500, because of this whole thing that we're going through, he doesn't believe all the companies in the S&P 500 are gonna perform as well, because they've never faced anything like we have today. And that's why you're starting to see companies already starting to cut their dividends in the first quarter of 2020.
So far this year, 114 companies in the index have suspended guidance. 79 have suspended their buybacks, and 31 have either cut or eliminated their dividends. Those are cold, hard facts, people. That's just the first quarter. We're only a couple of months into this downturn with 30 million people unemployed and maybe the worst recession since the Great Depression.
Now, you might be wondering right now, is if Buffett's hoarding so much cash, should I start hoarding as much cash as possible? Should I be investing? It's like, what should I do? Well, there's a couple key takeaways I think I've learned from listening and watching Warren Buffett over the years. And here's basically what they are summarized. The first one is, I don't believe Warren Buffett, because of the position he is in and how much he's in the spotlight, how politically connected he is to some of the most powerful, the richest people in the world, I don't think you're ever going to hear the man come out and say that the stock market, this economy, it's going to crash. I don't think he would ever do that. I think he's got too much pressure on him. He's got too many eyes on him, and he's got too much influence to come out and say something like that. So he has to be a little bit more crafty with his words. But the fact that he's holding cash tells me a lot of where he thinks the market's heading within the next year or so. He thinks it's going to head further down, or he's going to wait until he does see a company that makes sense to acquire. And right now, at least from his viewpoint, he doesn't see that. The next thing is that I think over the long run, and his optimism for America, you know, it could be right, it could be wrong. But I do think that in general, his advice is pretty sound, is that, yeah, maybe you and I, maybe we can't predict what the stock market's going to do tomorrow, the next year, or the year after that. But in the long run, if we buy good companies, companies that are essential to the economy, essential to people's well-being in their daily lives, I think you're going to do pretty well and you're going to outperform treasuries. Now, I personally like both ETFs and buying individual company stocks. I don't see that changing for myself. But he did say, I do think that if you listen to Warren Buffett, you'll learn that not all companies, even if they're in the S&P 500, they're not all good companies. They may be good now, but years from now, they might not be in that position. And so if you have an ETF, one of the downsides of that is you're gonna hold the good and the bad. Whereas if you determine and learn what companies to look at, what to analyze, then may have a better insight into what companies might perform well long term. And so you always have to be in the mindset of just because something's good now doesn't mean it's going to be good in the future. Thirdly, don't be afraid to sell a losing position. If you're in a business that has no foreseeable future, at least maybe not in the long run or even in the short run, then maybe it's time to exit the position. Yeah, I know he's known for buy and hold, but not everybody just buys and holds. And if you buy and hold for everything forever, you're likely going to take some big losses by doing so, versus knowing when to cut your loss or exit a position and get out with some capital and invest it in something that will perform well in the future. The fourth thing is Warren Buffett is a huge believer in investing in companies that pay dividends. And lastly, what I think is my favorite piece of advice or favorite insight from Warren is that the guy he's not afraid to make mistakes and admit he's made mistakes. If you listen to that interview, if you can find the full thing, if I can find the full thing, I'll leave a link to it below. But he said, he's got over 90 companies in Berkshire Hathaway, and he's almost 90 years old, so maybe it's one company per year of age. I don't know. I don't know how he's figuring that out. But within any portfolio, and I think this is encouraging for all of us, we're going to have some winners and we're going to have losers in our portfolio. In my portfolio, I have winners and I have losers. I have both. But the idea is that over time, hopefully you learn as an investor more of what to seek out, what companies to invest in, and increase your overall batting average. Are you going to hit a home run every time? No. Do you need to hit a home run every time? No. Not to be a successful investor, but not every investment you make has to be a winner. It doesn't have to be. And you can still build a nice retirement and still build a future and build wealth for your family. And I think that's the key takeaways, guys, is that nobody's perfect, not even Warren Buffett, but anybody can invest. Is it the right time to invest? Who knows? He doesn't even know. But I think the idea is to be prepared for whatever way the economy moves and the stock market moves, and get yourself in a position so that you can take advantage of the markets either way. And so I like to, me personally, I have 1 foot in, 1 foot out. Every month I invest a certain amount of money into my portfolio, and every month I set a little bit aside in cash, or I pay down a little bit more debt, or whatever it may be. So it's a good time with the uncertainty we have in our markets and our economy to be flexible and ready to move to any direction where the opportunity arises, and just be nimble and be quick. Until next time, guys, I will see you down in the comments. Let me know what you think of Warren's insights. Let me know what you think of Warren Buffett, and I will see you all in the next video. Love you all. Peace.